But let's move on then and put the spotlight on earnings. It's Havells that missed their street estimates. What's really hurt growth this time around, and will it continue for the coming quarters? Anil Rai Gupta is the Chairman Managing Director here to answer that and more. Mr. Gupta, given that the company has seen the lowest growth in nearly 3 years, and this has come despite the festive season, what have been some of the challenges, and when do you think you'll get back to double-digit growth?
Yeah, I think a few things. One, I would say that definitely the consumer demand has been a bit sluggish, but not only in this quarter, but last few quarters. We have seen some revival coming in the second half of the quarter, in fact, in December, which hopefully should augur well for the coming quarters. But also the fact that last year particularly there was a high base, especially for consumer durables. We've also seen lighting, deflation in the lighting business, whereas the volume growth is quite healthy. So we do believe that this is a little bit structural and topical because of the quarter, but we do believe that coming quarters it should be better.
Right. B2C demand continued to remain sluggish at around 70%. Is the recovery in sight? What's the outlook now for summer season?
Yeah, as I mentioned that, in the consumer demand, the B2C segment, there has been a little bit of slowish demand. B2B is doing well. Our professional lighting growth, despite the deflation in LED, has also grown in double digits. So that's healthy growth, which is coming from the B2B segment. But you mentioned about the coming season for the summer. This actually we are expecting to be quite a good season because we had unseasonal rains which actually meant high inventory into the system, into the channel as well. But with the coming season, we are prepared well. Our campaigns, distribution campaign, advertising campaigns are all ready to expect a very good coming season.
The campaigns that you're talking about and the penetration, I just wanted to delve deeper into that. I want to understand how's the demand shaping up from the tier 2, tier 3 cities, because of course Havells is a well regarded name when it comes to urban India. But what about the other geographies now?
Generally speaking, it has been pushed by a lot of public spending, and now we are seeing some revival in the private capex as well. So it is all across, and geographically also it is well spread. Though in the consumer demand, we do see that the B and C class towns and in the rural areas, things had slowed down more than the urban areas. But I think again, coming season, the summer season, as well as hopefully inflation now under control, things should get better there as well.
All right. And is there any sort of a trend that maybe premium products are doing better than the mass end products? Because that's something that we've been observing across sectors.
We've also seen this trend, and what generally happens in this situation is there is an expectation that the consumer will downtrade, but that has actually not happened. In fact, the consumer who's able to purchase is actually buying a premium product. But because of the inflationary impact over the last couple of years, there has been some deferred purchases by some segments of the consumers. And I think, as I said, with inflation getting abated, this trend also should start seeing some recovery.
Right. Your cables and wires revenue growth was about roughly touching 11.5% versus polycab 17%. Why is the growth lagging peers in this particular segment?
Well, we are hopeful that we are going to be benefited by the higher growth in the infrastructure segment with our new capacities coming up at Tumkur in Karnataka. We'll also be benefited with this. Our consumer wire sales, which is the B2C and the residential segment, that is growing very well. So that actually augurs well for the coming quarters.
Yeah, but I wanted to shift focus and talk about your Lloyd's business because the margins continue to be weak there. Any internal target in mind when it'll break even, or at least there'll be an improvement in terms of the margins?
I think we already are seeing improvement in the Lloyd margins, and a lot of cost initiatives are going on within the organization. On the other hand, high growth investments are going on in terms of brand and distribution. So we are seeing improvement in the gross margins for the business, and as and when the volumes grow and we start getting benefits of scale, we will start seeing more improvements in the coming times.
And what about your EBITDA margins? Because they have remained in this range of about 9% for the past few quarters. Is the level expected to remain, or can we expect double-digit margins in FY25?
Yeah, we do expect that because, as Lloyd is improving the margins, so that's also a sizable part of the overall business. But also within Havells, if you see in this quarter, there were massive investments on brand building, which obviously will normalize over the next quarter. So we will see improvements in the overall EBITDA margins for the company.
Right. Okay, Mr. Gupta, great to have you today on ET Now. Thank you so much for taking the time out and joining in today.